I promise to be brief, as brief as I can be.
We got plenty of time, Mick, so take your time.
Okay, thank you for having us. This is exciting and fun to tell our story, and to let you look under the skirts as well of what happens from a startup perspective. So this is a little, just very quickly about me. I've been an entrepreneur really since '96. My first company took 2 years to get funded. Was capitalized in '98. So I've been overworked and underpaid for the last 25 years. Most recently, I was the president and CEO of a company called Operative Experience. I was, in spite of 100% year-over-year growth, my champion at a PE firm that I had brought in. Went on to Morgan Stanley, left that for a PE firm and moved on, and I was replaced by our new champion in 2019. It was one of the best things that ever happened to me in my life. At that point, my wife wanted me to get, quote, a regular job. I don't quite know what that is anymore, but I stumbled upon Upright VR through networking, and really through some extensive beacon networking. UVR needed leadership, and I really couldn't pass up the opportunity. The next slide I'm going to show you is why I couldn't pass it up, and also it's also the slide in our pitch deck in terms of the investment opportunity. So I joined for the same reason I think investors should join. I'm not going to go into too much detail, but it tells the story. So the company UVR has a very disruptive technology. It's virtual reality used to induce and measure head sway as a way to assess fall risk. The competition in that field is really things that have been around 50 years. The predominant test is called TUG, timed up and go. You stand up, you walk 15 feet, you walk back, you sit back down. If it's less than 13 seconds, you are not at fall risk. It's kind of a silly test, but they've been doing it for a long time. It's a significant problem. 13 million seniors fall. 1 in 4 seniors fall every year. 3 million go to the ER. 300,000 break their hips. 30,000 die. And the Medicare cost alone is $50 billion annually. So the problem is significant. And the opportunity for the technology, of course, is significant as well. The market's large and growing, not just because senior population is growing, but senior population is more active and will continue to be more active. The CDC estimates a 40% gain in population over the next 10 years, while falls are going to increase 50%. So the problem is getting worse. It's certainly getting worse before it gets better. The team in place when I joined is a team of advisors. Is very entrepreneurial. The business development manager has led startups. He's also been business development leader for Fortune 50 company. And my product commercialization officer has done that for a number of companies, Fisher Scientific, Dave Bearing, some others as well. So the team was a good team in place. Significant upside. It's a SaaS company, so high margins, monthly recurring revenue, lots of positives. On the risk side, no fixed assets, minimal dilution, things like that. So it was a good story. It was a good story for me, a good story for investors. So this is what's above the surface, what I just mentioned. There's one other thing above the surface that I want to bring up because it's important and to my story. The CEO was the chief scientist and inventor. I was very curious and concerned about that individual and the personality of that individual. It turns out he's very coachable, and he's atypical for an inventor. And what I mean by that is he's not arrogant. He's, one of the sayings that I live by is, if I'm the smartest one in the room, I'm in the wrong room. I think he feels that way too. In his area of expertise, he's certainly an expert, but he's very humble. My previous experience, the inventor and founder of the previous company was a inventor trauma surgeon. So it magnifies that. It was a very toxic work environment, a very narcissistic environment, culminating in I was actually assaulted with a deadly weapon by the founder's son. That wasn't, and he got a 5-year prison sentence, by the way, but that wasn't the worst of the experience. The worst of the experience was the father, who was the inventor, created a very, very toxic work environment. So at this stage of my career, I wasn't going to deal with a inventor who was going to make my life miserable. So anyway, so let's now go and look below the surface. So I joined because of the things up top. There were a lot of things below the surface that needed to be fixed or were problematic. And these are things that investors, early investors who saw our pitch deck, weren't necessarily aware of, but all the things that had to be done behind the scenes. So the cap table was a mess. I think there were 11 people on the cap table for a company that had no revenue and no significant influx of cash. Governance issues were a mess. Articles of incorporation, I couldn't even find a clean copy of that. The company was formed as an LLC initially, and then switched to a S corp. Don't ask me why. We had to, of course, change that to raise capital. There was the product was actually a prototype kept in place with spit and a prayer. They didn't know, weren't sure about Medicare reimbursement for the product. The pitch deck that they had was not really a pitch deck. There was limited cash. There's FDA requirements where the product is a class 2, a 510K exempt product, but we didn't have our ducks in a row. We didn't really know what that meant at the time. Company had no liability insurance, even though we were out doing field trials. The accountant for the company was one of the founders' personal accountants who never worked with businesses, never heard of an 83B filing. So there was just a lot of things to fix. We had a tentative agreement, thank God it wasn't signed, with Temple University. The technology is out of Temple. It had Temple as a 15% equity position, non-dilutable through the first $2 million of investment. I was concerned that that would make raising money difficult, as you can imagine. So that's been negotiated back down, now down to 5%. And then COVID really hit the company hard. We had a number of field trials really ready to go. I met Temple, I met the team, went through an interview process with them, but I really only had met the team one time before COVID shut anything down. And when I met them, they were on the verge. I say they because I wasn't really in it yet, was on the verge of 3 different field trials in senior facilities. So again, these are all the things that I had to deal with to fix. And for all you out there, potential investors in companies or private equity folks, this is what happens behind the scenes. And this is, I don't think this type of problem is not unusual for startups. Startups are really focused, and I would tell them the technology is not a product and the technology is not a company. And that's where, I think the inventors typically start, and then all these other things have to be done. So I got a Beacon introduction to Jeff Dubrow in February of last year. And the Beacon is throughout this story, Beacon influence on this is throughout the story. And that led to our launch. We launched last week. I'm thrilled with our presentation of our company, the reception we got. And I'll mention this is another issue with a startup. Everything you see here, none of that existed 2 weeks prior to the show. An hour and a half before the start of this trade show, one of our members was taking an Uber to go pick up our brochures. So the looping video that we presented was completed the night before the show started, but everything went off without a hitch, and we looked, of course, completely professional. I'm now going to introduce Jeff to talk from his point of view about his background and how he got involved. So Jeff, let me turn it over to you, and I'll change the slides as you tell me to.
Well, thank you for having me here. My previous life, I was a builder. I still do land development work, but built a number of custom homes, including Georgine's house. I forget what year it was, but it was quite a while ago. We had a family partnership with my brother and sister, where we had some real estate in the family, and we were trying to do estate planning, and then we would take the profitability from that, and we worked with a number of venture capital limited partnerships in Philadelphia, and got a lot of experience, not really hands-on, but observing how they looked at deals, and which ones were successful and which ones weren't. In between there, I also owned a architectural millwork company that we bought out of bankruptcy, and we did a lot of, it was all union. We did a lot of casino work, hospital work, and schools in New York City. We also did the Pyramid Club. We did all the woodwork in their meeting rooms. And then I got out of that deal, sold it to management. And then that was around 2002. A friend of mine from college knew people that were the founders of Prime Point, and I got in on a friends and family with a small amount, and then they were looking to raise some more money. So I liked what I saw, and became the largest outside investor. I do some business development and mostly an advisor role. 2010, Jerry Hampton joined Prime Point, and we worked together since then. And Jerry introduced me to, or got an email from Mick, and Jerry said, "I know you do this kind of thing, so you want to take a look at it." Mick and I met a few times on Zoom meetings, and we seemed to get along pretty well. And I just threw out that if I'm looking at a piece of land, first thing I do is to go out and grab a couple of shovelfuls of dirt, take it to the lab, and have them analyze it for toxins. If there's toxins, I walk away. I knew Georgine from building her house. I reached out to her, and she said, "Yeah, I know Mick." I said, "Would you do some due diligence for me?" And she came back and said, "This looks like a great group of people. Don't find any toxins." So in February, we started, I guess it was March, we started to negotiate a deal, and came to terms, and that's where we are now.
Let me interject here, because I want to really mention how lucky we are with Jeff. And when Jeff wanted to be very active, and he made that clear from the beginning, he didn't want to be a passive investor. A lot of folks in this world say, "Ooh, be careful. You don't want your investors, up side by side with you every single day." So I had that concern, of course, but Jeff has contributed mightily to this cause. And so that we had discussions. He knows the CEO of Bayada Homes, and it really redefined our understanding of that marketplace. He through his connections in insurance, we were able to save 50% on our insurance policies. Every nickel counts, of course, with a startup, particularly when it's his nickel. He offered to provide us free office space. He loaned us money. The deal we have isn't even completely executed. All the terms have been agreed to, but we got attorneys doing what attorneys do. And so he actually has been funding us, enabling us to do that launch. And then to show the commitment of his family, his sister worked with us at the launch at the senior living conference that we launched at last week. So we're truly lucky. I think it's an unusual circumstance to have an investor like Jeff, who's not meddling or over coaching us, but just really, I think of him as a partner in our business. So anyway, so that is the story of how we got to launch and how we connected with Jeff. And I can stop my share now if that's okay, and we can open it up to discussion and questions and all of that stuff.
Great. No, thanks, Mick and Jeff. That's a great story. And I just wanted to mention that if anyone has any questions, if you maybe initially want to post them in the chat, and we can pick them up towards the end. Do you want to kick off, Nicholas, or should I?
Yeah, absolutely. So thank you so much, guys, for the presentation. I think it laid things out really well. And Mick, you were starting to get into this quite a bit, but can you explain a little bit more of the product itself and of the business concept?
Yes, absolutely. So it's basically a virtual reality application, and we induce and measure head sway. So what we do is we kind of screw with the visual that people see, and then we measure the response to that. So for example, initially it's just you're standing on a firm surface and you're looking straight ahead, and we see just how steady you are. We shut the lights out then, and if you notice yourself, if you just stand up and shut your eyes and stand there for a little bit, you're not as steady. And that's because different areas of different sensors and things like that in your body are used to balance. Balance is not as straightforward as everyone thinks. Then we do something which is interesting. The scene stays fixed. So if you were to move your head slightly, the scene doesn't change. And that is equally kind of screws with you. And then the last scenario of this test is actually where the room starts to spin. And that gets the most significant reaction. We repeat those on a foam surface, people with their shoes off on foam. And the reason we do that is we take away the stability so we can then isolate problems. So the real exciting thing about what we do is we can identify causal factors such as neurological problems or musculoskeletal problems or sensory and motor deficits. And there's no technology that even attempts to do that. Any kind of balance or fall risk assessments that they say is out there really just deals with physical therapy, exercise, and things like that. Nothing along these lines. I will mention too that we are working with audiologists as well, because that's a significant area. Inner ear issues and things like that are a significant problem area in balance. So we and I'll mention one other thing too. There is technology that does this. It's been around for a while, but it costs $150,000. It's the size of a big phone booth. And they use what's called pressure plates on your feet. Ours is our entire kit, if you will, is a headset and an iPad, fits in a little 5-pound case, and we can test seniors in their living environment wherever we don't even need them to walk. We just need them to be able to stand up. So the technology is really in advance. And I'll mention one other thing too. Before I signed on the dotted line with this company, I'm good friends with a gentleman who owns a senior health monitoring company. Talked to him about it, and he said, if your technology does what you say it does, this is the holy grail in senior care, because it dominates the discussion. In our first conference, when I walked the floor, I visited every single company in the conference hall. Lots of them had words on their screen about fall risk and fall risk assessment. None of them really do it, but all of them address it in some way. So the technology is really superior to what's out there.
Great, thanks, Mick. Maybe Jeff, we could just turn to you for a minute. Just be good to get a sense from you. I mean, I'm guessing as someone who's in a number of different businesses and an experienced investor, you get a lot of investment opportunities and requests. It would just be interesting just to hear from you, some of the things that sort of attracted you to this opportunity. Was it the potential and the return, or what Mick and the team were trying to achieve, just some of the thought process you went through in deciding to get involved?
I think one of the overriding things was just the exposure to people that I know, family members that have fallen, and there's not too many people that you can talk to that can't say that nobody in their family, none of their friends have ever fallen and had an issue with it. So I could see the need was there. I didn't know what the competition was until I got further into it, but it looked like there was not too much that would be an obstacle, at least at this point. It was something that was simple enough that I could understand what was going on, even though I always say it's not rocket science, but the founder actually worked for NASA, so it is sort of rocket science. But coming from a background with bricks and mortar and 2x4s, it was something that I could see was actually something that was gonna happen in the near future or the near term. Wasn't going to be years of development. So it was exciting to get involved at the stage that I did, where we could take it from February to September and actually have a product and have it launched. And I get exposed to a number of opportunities, but mostly turn them down because it just doesn't seem like the best use of my time. That's about it.
Okay, great, thanks, Jeff.
So Jeff, kind of staying with you for a minute, and talking about why you decided to invest in this, right? You had some very interesting slides there talking about you didn't find any toxins in the team, and you just mentioned some interesting points about, it looked like it was good technology, something you could actually understand, and something that you thought was going to be easy to develop. But were there IP issues you were looking at that also that you thought led to a good investment, or to some of the points that Mick brought up about how he thought it was really addressing these fall concerns? So was there that unmet medical need as well that you thought, what again kind of influenced you to invest in this?
Definitely the unmet need. Obviously, the pitch deck said that that this was the only thing out there, and it with a little bit of due diligence, it was proved that there's not a lot of competition. So it was the need and the timing of it again was good, and the group of people were very impressive. Not only the team, but there's a number of people that have been with the company for a couple of years that I'm not exactly sure how all the connections were made, but we've got weekly meetings where we've got 6 or 8 people on a call and go through things, and it was I've been on those calls since March or April, maybe a little bit later than that, and really learned, started learning and getting very comfortable with where the company was headed, and how smart the people were that were involved with it.
Mick, you've ended up with a great partner in Jeff, but all of us who've sort of been involved in funding early or trying to fund early start companies know that there can be a lot of challenges and trying to find the money. So whilst it's ended up with a great result, I'm guessing there was a few bumps along the way trying to get to the right partner. I mean, do you want to share with us how you sort of approached it, and some of the adversities you had to sort of tackle in that process?
Yeah, so I belong to, and I did it really through networking. I belong to ACG, Association for Corporate Growth, in the Baltimore chapter. I actually live in Bel Air, Maryland, and I furiously networked within my own existing network. I went down literally alphabetically through the ACG members in the Philadelphia region. Now that group are mostly, private equity folks, and we're early obviously for private equity, but people in that arena know people in that arena. So did a lot of networking, did a lot of presentations, had actually just a quick aside, I had and this is kind of a problem of raising money for startups. I had a series of discussions with an investment banker from Janney Montgomery Scott, who was really thrilled with the technology. His mother had actually fallen and all that. He said, at one point, he says, "What can you do with $10 million?" And I said, "Put it in the bank. I don't need $10 million." And he said, I could introduce you to a number of people who would be interested in investing $10 million. I don't know anyone who's interested in investing $2 million. It's just way too much work. So the lane that we're in raising money at this level is narrow. So I just was pounding the pavement. I put out the Beacon message. I got some hits from that. It wasn't simply the hit of the introduction to Jeff, and I pursued every angle. We did have a series of discussions with a small, well-known investor in Philly. I probably shouldn't mention his name, who invests in the $2 to $5 million range. Very, very interested. We had a series of meetings at his house, demonstrations, etc. He's interested in being the next investor. He wants to be, he said, once we get a little bit of market traction, then he's interested. So we think we have a line on our next $2 or $2.5 million raise, which is what we're going to need early in 2022.
We've got a couple of questions coming up in the chat. Mick, people are asking whether the technology you have, whether it's protected by IP or whether it's something that people would be able to copy, or your competitors when they realize how successful it is. How have you sort of tackled that side of the business?
Yeah, so there is a pending patent application on the core of it. There are some other disclosures that are really important trade secrets that may or may not be filed as patent applications. But yeah, so it's possible that there will be competitors using VR. They are using VR, by the way. Significantly amount of VR is used for seniors now in education, entertainment, things like that. So VR being introduced to this population is not new. Therapeutically, it is new. There are some VR companies who do rehabilitation with VR, particularly like occupational therapy. So you're in the supermarket, and you reach up for the shelf for the, box of rice or whatever it is. So, and that's done with virtual reality. We will be adding, we will be migrating into some of those areas that are easy to add, to do add-ons, particularly in the area of rehabilitation. But it's a question, just I think, of first to market, and also our scientist has really been working on this for 20 years. He talks about the first virtual reality headset he bought was $30,000, and now they're $400. So.
Jeff, just turning to you. Both yourself and Mick have sort of touched a little bit on how you're working together, how you're an active investor. From your perspective as an investor, what do you sort of see the end game? Do you have a sort of time horizon when you hope to hopefully be able to cash out some money or exit, or do you see this as a long-term investment, or just you're in at the early stage and other people will come in subsequently? How do you sort of view your sort of involvement?
I would say that we're looking at a 3 to 5 year horizon. That was attractive to me. When I got involved in Prime Point in 2002, roughly, I thought it was going to be a 5-year horizon, and here we are 20 years later and still plugging away. But it's fine. We found a niche and we're doing well with that. But I would say that I would be happy if we were out in 5 years, and I would be happy to be as active as necessary, or if you know, if things start taking off and I'm not needed as much, then I just step back. But I don't want to see a 20-year investment.
Well, you've heard Jeff's view, Mick. I mean, turning to you, are you looking at 20 years or 5 years on this?
I'm looking at 3. Honestly. And let me just say one of the really interesting things about this market is the senior space has undergone major consolidation in services. We're not looking to put this technology in the senior center down the road. We're looking to sell this to the corporation that has 200 senior facilities. One of our field trials is with physical therapy companies. They have 600 facilities nationwide. That sale would exceed our first year projections if we sold to them nationwide. In our launch last week, we made some great inroads with partners, and these are organizations that service hundreds of facilities through their organization. Those are the kind of sales that we're looking to make and the kind of relationships we're looking to build. So we are looking for this to ramp up quickly. And I'm not.
Can you give people maybe just a sense of where you are in the sort of cycle, because you've obviously officially launched it. So presumably, I mean, do you have your manufacturing at scale sort of sorted out, or is this just an initial launch to sort of get it out in the market? And how does that sort of marry with the exit? I mean, are you looking just to make people aware of it so someone buys you, or do you want to do a full sort of take this to market type operation?
Yeah, so well, the first thing is there is no manufacturing. We use commercially available headsets, so we're installing testing software. So it's a software application,
okay, which
is a huge advantage for lots of reasons, obviously. The idea in terms of an exit is to build this as rapidly and as profitably as we can, and then again back to the consolidation in this space. There's just a lot of activity and a lot of private equity activity in the senior space, just because of the growth and opportunities in this market. So I'm not, if we are even close to the projections that we have, and I know projections from startups, everyone cuts them, divide by 4 and things like that. But even if we're remotely close to these, I think we're going to be a very, very attractive acquisition target. So I don't have a strategy beyond that. I'm not thinking IPO or anything like that. I'm thinking certainly an acquisition.
Yeah, we just got a couple of questions in the chat, which I think people are very intrigued by the technology, just judging by these questions. I mean, someone, so just trying to read it while I'm talking to you. Yeah, are the tests administered by a nurse or a health advisor? What sort of person?
Yeah, so it can be a physical therapist, it can be a nurse, it can be any kind of paraprofessional, medical paraprofessional. We actually certify and will be certifying people to use the technology primarily because of the spotting requirement. Now, we've never had anyone actually fall during the test, but when the room starts to spin and people are on the foam surface, it can, you can get a lot of this, and people, particularly seniors, can be uncomfortable. Or I would say challenge. We've tested this, by the way, with seniors as old as 98 years old.
Oh, wow.
And she did great. The test now is about 8 minutes, but back when we tested her, it was more than twice that because we were gathering a lot of data and things like that. But seniors have responded well. That was one of my concerns when I first came in, is were seniors really going to do this? So we do require this spotting function, and most people in the medical areas that we're dealing with have spotting experience. And again, we will certify every single user of this just to make sure that they're aware of the spotting requirement.
And you obviously sort of, another question here, first to the market with this sort of technology. I mean, are you concerned that someone's going to come along and do it cheaper? Maybe one of the bigger players, or do you just sort of figure you're first to market and so you've got to run on everyone else?
Well, I think we're first to market, and the algorithmic work, the underlying algorithmic work, is really the secret sauce of this. So to jump in for particularly a big company, it's going to be cheaper to buy us than to develop it themselves, and they're going to be chasing us even if they're bigger. This work has been going on for really probably 2 decades to get us to where we are.
And what's the sort of price point of your product? And another question, is it sort of Medicare reimbursable?
Yeah, so it's Medicare reimbursable. The price point is $3,500 up front, which is the hardware and software and the installation, and then it's a recurring revenue subscription model. And the reason we have a subscription model, by the way, is we track patients. That's another advantage of us that nobody else does. That the other tests are one-time tests, and they're very subjective too. Ours is as you know, is very scientific, but we track patients over time across a number of different metrics. So purchasers or users of this would be under a subscription agreement, and we have HIPAA compliant, data management, and certainly IP and royalty issues with Temple and things like that come off of this. The subscription is going to range in the neighborhood of $150 and up, depending upon utilization. Doesn't sound like a lot of money, but when you're dealing with the numbers that we are, we want to make this really a no-brainer. It is reimbursable with Medicare.
So when you say the 150, is that a month or a year or what?
Month. Yeah, monthly fee.
Yeah.
Monthly fee. The typical we think is going to probably be around $300 or $350 per month as a subscription. And the Medicare reimbursement in this region is about I think $48 for the test. The test takes about, like I said, it takes less than 10 minutes to administer the test. The current methods that they use just to time people and observe and things like that take just as long or longer, and they're reimbursed at about $20, $22, I think. So we have financial advantages as well for people using the technology. And the break even is, they 3 uses a week will double the investment or double the return compared to what they pay both upfront and over a 3-year period. So it should be financially attractive in addition to the therapeutic benefits.
And you mentioned that you've got to do another round of funding. I think it's early next year. Was it 2 to 5 million? Was it, if I remember right?
No, 2.5 million probably.
Okay.
Not probably. That's what we're going to need.
Okay. And will that take you to profitability, or are you going to need further funding beyond that?
No, that's all the funding we'll need.
Right. And Jeff, from your perspective, looking at further funding, what role do you see yourself playing in that process in terms of not necessarily putting more money up, but I mean, obviously you're a partner in the business, you have a keen interest in who new partners for funding and coming in are likely to be. Do you see yourself playing an active role in raising further money for the company?
I do. It's one of the reasons why the partnership's working out, because I've got a number of connections. The partnership, the family partnership, we've been investing in limited partnerships with Quaker Bioventures in Philadelphia, and another number of investors. It's too small for a lot of the funds that we're in, but the connections that are in those, I don't think it'll be too difficult to find somebody as an individual or a small fund that wants to get involved. So I would say yes, I'd be pretty active with that.
Okay, great. Yeah, we've got a couple of questions in the chat, and one of the things I wanted to pick up with you, Mick, what's the sort of culture you're trying to develop in the organization? How do you think about additional hires you've been making and you may need to make to sort of take the business to the next level? Can you sort of give us a sense as a CEO of the business what your sort of philosophy is around the sort of
Yes, certainly, and I think Jeff can state to this, as can Georgine in interviewing the team. it's a very, very collaborative work environment, and that's my leadership style too. So we have, Jeff mentioned, we have meetings of, 9 to 11 people every single week, and it's very collegial in sharing of ideas, and we've done that, even in terms of our messaging and things like that. So it's a great team, and so I rely on the team very much. We do have some issues because we're all, not all old, but mostly old white guys, and so we don't have a lot of we don't have any diversity. We don't have a female on the team, so we're looking to add staff now, obviously, and we really want to get some diversity. For all the benefits of diversity too. So we're looking to grow. In terms of culture, I've been at the extreme of the toxic side of the cultural situation, and that's not my thing. I'm firm in my decision making, but like I said, it's very, very collaborative, and it's. I'm very supportive of the team. So culturally, and by the way, there's I think one of the sponsors is the EOS. I'm a fan of that system, and of people buying into establishing the culture and buying into the culture of the organization. We have a vision statements. We have a mission statement. And those were done collaboratively with the team. That wasn't what I said, here's our mission, here's our vision. So then think about that early on when we're trying to get money, when we're trying to plug holes in the boat and things like that. We're still even thinking about the mission and vision. So I'm trying to establish the right environment. And I think so far, so good.
Good. Yeah. Sorry, Andy. I'm finally back. I lost the internet for a little bit, but no, I think I'll continue on to some of the points that you were getting into the chat and answering some of the questions of everybody online. I'm particularly interested in one of these questions. It says, since the test is so efficient to administer, how many units are you projecting per customer facility? Because Mick, I caught the tail end when the internet finally got back on. I heard you point out saying something about 3 tests a week really improve the experience of the patient. So obviously, it's very much being treated as a regular therapy on a regular basis. So is there a plan to kind of administer more and more units to hospitals and things like that? Because
yeah, so just to clarify, the 3 tests a week are really, we're dealing with actually a personal connection of mine, an audiologist who used to have multiple facilities, now has 1, and he needs this for about 3 tests a week. That's all his, that's not per patient, that's per his whole practice. And that will lead to a doubling of his investment over 3 years, or the return on that with insurance reimbursement. So that was the 3. We anticipate patients. We don't anticipate testing, and I think at most would be on a couple-week basis. But the standard type of testing would probably be quarterly, and that's what we think. So in terms of facilities, I think a typical physical therapy practice, which is one of our target markets, they would only have 1 unit per that facility. Again, if we look at senior living facilities, it really depends on the size of the facility. But you think about it, if a senior is getting tested maybe once a month or once a quarter, and it's only a 10 or 15 minute experience, you don't really need a lot of units to cover that. The universe, though, of opportunity is really significant. So we're not planning in any of our projections to have multiple units per facility. It's just 1.
Okay. And are you guys starting to look, because you mentioned the universe there. So are you guys starting to look above outside of the U.S., or things are primarily focused right now in the U.S.?
Yeah, it's completely focused on the U.S. In fact, we just had discussions with attorneys about the patent filing is in the U.S. only at this point in time. So we're going to focus on the U.S. and all our projections for the first couple of years are U.S. only.
Very good.
We got another question here from Glenn. What age would testing be starting? I mean, obviously it's directed towards the aging population, but is a trigger age?
Well, our focus is on 65 and above, and I would say our focus is matching what the CDC's focus is. I mentioned that there's 1 in 4 seniors that fall. People between the age of 45 and 65, it's 1 in 5 fall every year. So it certainly could be expanded. We also have done a significant amount of tests with athletes because of concussion issues and things like that. We've tested Parkinson's patients. So we have a lot of additional market opportunities to pursue. And we will be pursuing them. Down the road in our growth plan, we have identified opportunities to put this technology, if we can adapt it for someone sitting, which we will be working on, then the market opens up to places like CVS and, even Walmart and places like that, that do some health services. So there's lots of expansion opportunities that we see, even just without expanding the capability of the technology itself. When we get into rehab and things like that, certainly those are opportunities too, but just the core technology, there's lots of different areas that we could be applying this.
And what's the sort of process you go through, Mick? As you say, I mean, potentially there's the whole of the world you could tackle, there's different aspects of it. I mean, but you sort of need to stay focused on the mission. So how do you counter all of the opportunities versus what it makes sense for you to sort of focus on at the moment? What's the sort of process you're going through for that?
Yeah, so we are being approached for other things too. We've got someone approaching us who's involved with the Philadelphia Union, who wants us to do a study of the athletes there and things like that. So opportunities are being pushed in our direction. We are focused on the senior population, and we're focused on that from a couple of different perspectives. Physical therapist is a target for us. The senior living facilities themselves are a target for us too. So those are the two areas. Again, because of the consolidation of the industry, and I'll give you an example, the active adult living facility environment, there's only 115 agencies that own all of those. So we've got 115 points of sale. So that's a nice focus. Physical therapy too, if we look at the top 10 organizations in physical therapy, they own like 30-40% of the market. So our points of sale are enable us to be give us focus even in pursuing a couple of different avenues, if you know what I'm saying.
Yeah.
Is there an idea to that point about kind of focusing in on those 115 points of sale? Is there the idea, you mentioned Philadelphia Union reaching out to you, but there's a good question here from Maria about, would you ever venture into gyms, right? Trying to work with the seniors that are attending gyms and see if they can work with the physical therapists and things like that obviously are employed there.
Yeah, that's a good question. And I would say initially only through the relationships with the physical therapy groups. And two of the companies that I met with last week, and we actually have already had follow-up discussions with them, are companies that provide physical therapists for hire, if you will. One of them, they have 600 physical therapists nationwide, and they go in and they do physical therapy in different places at different times. So they don't have the brick and mortar of the physical therapy operations. They've actually grown in the last 6 months. They've hired 200 additional physical therapists. So people like that, I suspect, and I don't know much about how the physical therapists work in the gym environment, if they're hired by the gym or if they're brought in outside. I suspect they're brought in as needed. But these kind of companies that provide physical therapists as needed, they're our focus. Whether they do that in the gym, whether we do that in the senior facility, I don't, haven't really thought about that.
So the growth plan is very much partnering with those larger strategic, organizations, strategic partnerships, as opposed to kind of, grassroots going after individuals. Like do you ever see, I apologize if I missed this earlier, do you ever see this, actually being in the house, in someone's house, and somebody owns it, and they would use it on a daily basis on themselves without oversight?
Yeah, that is a very good and interesting question. The only limitation on us doing that, it has to do with the need to spot someone. In terms of the technology and the data capture, and it's automated in terms of the administration of the test. It could be done in the house, but as it currently stands, we require that spotting. So we haven't thought about, down the road, that's not in our plans to have that level of commercial market or consumer market, except for like a CVS situation, something like that, where it's more controlled. And even in the mini clinics where they do have a nurse or something like that, it could be administered there.
We also looked at, not that it's our focus, because selling to one doctor takes as much effort as selling to 100 or a group of 100. But I guess one of the initial pitches was that it's almost like an EKG. Once you hit 65, your general practice doctors should be, or your primary care doctors should be administering this on an annual basis. So they have the facility, they have the staff to do it. And one of the targets that kind of backed off of was the large physician groups. But that's another large group that we could go after. But we see the physical therapy as a better target early on.
Mick and Jeff, you mentioned that you've got the subscription basis and that you're capturing a lot of data. Some people are viewing data as the new gold. How do you envisage sort of using that data? Are you going to be analyzing it, or are you ultimately going to be selling that data? How does that help the patient at the end of the day?
Well, the first part of the question is, well, we certainly will be analyzing it. It's going to support research, and there's value in that data. So we anticipate, although it's not in our financial plan, it's certainly in our plans. That's identified as an asset of the company, and we're collecting data that nobody's collecting. So, and with falls being such a big problem, not just in the U.S. but globally, there's going to be opportunities to monetize that database. The second part of the question, how does it help the patient? It shows progress or lack of progress across a number of different metrics of balance. So we can identify, and the other thing is early identification of a problem. The way the industry works now, and the way our messaging is the industry is focused on reaction and rehabilitation from falls. Our focus is on assessment and prevention of falls. So we can identify problems. And I'll mention too, 1 in 4 seniors fall every year. More than 50% of seniors are at risk of falling every year. They just don't fall. So we want to identify those folks, identify their deficits, so that they can, the intervention strategies, the wellness programs and things like that can support that. And Jeff's comment about the EKG, currently the only test that's done when you're 65 and above for Medicare is a question: have you fallen in the last 6 months? If the answer is no, there's no more follow-up. In our case, and Jeff mentioned, with more than 50% of people at risk of falling, a 10-minute test at your annual physical makes a lot of sense, right? So hopefully that's where we get, that's a long ways off, I'm sure, traction and things like that, but that's where we'd like to end up.
Yeah, kind of getting the healthcare industry to think differently about that is going to be somewhat of an uphill battle, I would imagine, to approach it as preventative care as opposed to reactive care.
Well, yes and no, Nicholas. I had a discussion with the CEO of Brightview Senior Living Facilities, and I think they have 34 facilities, something like that. I don't know. He knew during our discussion how many falls they had across their system the past month. That's how important that is. And if a active living facility loses that bed, not only is it disruptive when people fall and things like that, but they lose that revenue, and it's a very, very, very competitive environment to fill those beds. So the those types of people are very, very motivated here.
Okay.
And so I don't know about the just standard physicians. That's going to be a longer or harder road to travel. But I think the folks we're focused on now are very, very receptive to this, very anxious for this technology, actually.
Gotcha. And I guess when you're kind of starting, because you've mentioned, you're looking to do a little bit more, look for more investors, more strategic investors. Are you looking in that direction? Not just people willing to open up their pockets and give you money, but people who have connections to these facilities and these healthcare organizations as well?
Well, my first comment would be, you're giving me more credit than I deserve, because last week I'm on the floor putting carpet together. So I think in terms of the ideal investor that we will be looking for, the one I mentioned that was interested is a SaaS investor, and he invests in SaaS companies. So that type of investor would be helpful in one area, certainly from a technology and growth area in terms of that type of technology. But certainly the ideal investor would be strategic and have some focus or presence in the markets that we're serving. I could see. I could see one of the larger. We're about to do a field trial with a company that serves 30 some states. And they have facilities in 30 some states. I could see somebody like that being an investor in us. And that's a whole different type of investor. So I don't know the answer to that. I'm as you know, and people know who deal with startups, we'll look for money wherever we can get it. But ideally, there's certain types of investors that would help us more than others.
Mm-hmm.
I sound like a lawyer in that answer. Don't mean to.
Well, look, I think we're just over the hour now. It's been a great discussion. I don't know if we want to I know we had a lot of questions in the chat, whether we just want to open it up to the wider audience, in case there's anyone out there wants to throw any questions at you, Mick or Jeff. Is there anything else, Jeff and Mick, you'd like to sort of finish with? Just, it's a great story, and we really appreciate your time, and sounds like you're in a great partnership together. Anything else you'd like to add?
I'd like to say something just about Beacon. I mentioned a couple of the connections we had. Trish is on the call too. Trish connected us up to help us find a facility and things. So thank you, Trish. But Beacon has been when I tell the story of what happened, all the circumstances that I dealt with in the last company I was running. This was before I joined Beacon, and some people said, "Why did you put up with that?" And the reason I did was I didn't have the network support and of smart people to say to whack me in the back of the head and saying, "You don't want to be in this toxic work environment." And so when you start a company, when you're in a small company, the tendency is to just focus on your desk and you don't reach outside the walls, and that's a problem. And Beacon has been fantastic for me in terms of networking and talking to smart people and having resources like this to support me personally, to support me as a CEO of a company, and then to support the growth of our company. So I just and the fact that Georgine is connected too, and somehow the reach of Beacon is impressive as well. So I thank everybody for participating in this to our benefit. And I can't say enough about the Beacon experience. So a plug for Beacon to Beacon.
Beacon is the premier executive networking organization serving the Mid-Atlantic region. To learn more, go to beaconforlife.org.